Good morning, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on Wednesday, the 20th of September, 2017. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The market this morning sits in pretty much dead territory. Crude oil is stronger this morning, trading up 1.06, 1%. Up 50 cents, $50.41. It is trading in the middle of the balance that's been in place for the last maybe 10 days or so. No, 7 days, 5 days. We'll look at crude for a little bit today. Eliminating some of the stuff at the beginning of the broadcast allows me time to look at more products with you while staying within that 10 to 15 minute range. I want to make sure that you guys recall that tomorrow at 11 Eastern, I'll be the keynote speaker for the Bookmap Professional Webinar Series. In it, I plan to discuss how I'm looking at order flow for execution and trade control. I think chances are you'll pick something up from it, but it's just I suggest you have a look and participate. The link for that is in the description of this YouTube video, also on my Twitter feed at twitter.com/FutureTrader71. Again, crude is leading, gold relatively strong. Everything else is pretty much flat, unched, and the DAX is lagging today, again losing 13 points, but only down by 0.1%. It's a mixed bag this morning. The key element of the day is the FOMC. The Fed meets today, and a decision is likely. The conclusion of today's meeting. We expect the Fed to keep its benchmark interest rate unchanged between 1 and 1.25%, and announce the process of unwinding its huge balance sheet. Also interesting that I saw this is the second largest bull market since World War II. Stocks have climbed roughly 270% from their March 2009 low, eclipsing the bull run from June 1949 to August 1956, according to LPL Financial. Let's take a look at what's ahead. This morning, looking for existing home sales at 10 o'clock for August. Expecting 5.46. We get crude oil inventories at 10:30, and then the rate decision at 2. Again, expecting 1% on the lower bound and 1.25 on the upper. Fed Speaker Yellen to have her conference at 2:30. So expecting a lot of noise and a lot of movement this afternoon. The market is anticipating a change, and that creates opportunity. The market's also wound up. We were in balance across the board yesterday. We'll look at the RTY as well to see that it is really wound up to do something. Let's take a look at the what we expected yesterday, just to review. Again, transparency is key here. So we're not looking at things in 2020 hindsight, but to see what was expected versus what happened. During the trader bite yesterday, the market was trading around 25.04. The key expectation is for an open auction in range in value. The market was expected to roll down to 25.02, hit the point of control, bounce around in there a little bit, and then the market was expected to roll up and then just stay near highs by making a new high. I expected it to push through 25.0775, the measured move you see there, to 25.08. That did not happen. We ended up going to 25.06. We executed on Hypo 1 yesterday as a market, but couldn't quite get above 25.06. So we have a double top between Monday and yesterday's trading. There's a double top there with a high bar. Second hypothesis was expected to be a push out of range quickly that fails back, and then the expectation was for us to push all down to 24.99 and then hold steady inside of 25.02 control consolidation and noise. Market tries to cross through the range, the opening swing range, all the way through to the top, and then ends up failing, pushing lower. Remember, at this point, we've only had our largest rotations just 3.5 points. I mean, it's terrible. Then we push the initial balance low and the opening swing low. We push them by a tick. So we put in a low of the first hour, 25.0150. We pushed that to 25.01 quarter, and then we had a burst upwards, and that's what's called a one tick failed auction at the IB. This shows a lot of strength. Essentially, the market worked hard to get to the last low. The best it can do is one tick. Then we get a strong move, impulsive move up, relatively strong. I mean, this is 4.5 points. We're not talking about 10 points, but to the high, and then the market DES just hangs out there for the rest of the afternoon, giving us a weak high and a profile that is somewhat P-shaped. So we expect a continued squeeze higher in the overnight session, which did not happen. The market's in a holding pattern currently. Where are we? Man, it's hard not to be able to see the labels for these windows in Windows 10. So here's where we are. Look at this. Look at how this has played out. Basically, we traded up on the 17th, on the 8th, so that's the Sunday night. On the 18th, we tested up and down. The overnight of the 18th, we go sideways and hold steady in balance. Yesterday, we simply mimicked the overnight session, and then last night, we mimicked yesterday's session. The market is in a complete holding pattern with a fair amount of volume near the top here and holding steady. This preempts a big move down likely. So the overnight session is not giving us much. It tried to push lower. And then it started to rotate up, and we're trading near highs. So I'm expecting the market to attempt higher first. If the video is buffering, if you can hear me, if the video is buffering, just reload. I guess there's something wrong with my connection again. Need to sort that out. Let's take a look at our expectations. Actually, let's take a look at crude real quick. So here's the day session in crude. Crude pushing recent highs, has run up pretty good, has gapped up, and has been responsive since, and is holding steady in this range. If you look at what we've done over the last couple of days in crude, we'll see that it has a fairly balanced profile, composite profile. It's trading very well. It is testing back and forth. Yesterday we had a downtrend that did not break the prior low right there, and is pushing up. This morning, crude is trading back at the point of control. Here's the point of control, this dark purple maroon line. And it's holding steady in here. Crude is waiting for further news. It is balancing out in the $50 range. I'm expecting another big move from crude, maybe on inventories today. No, the buffering is on my end. The messed up connection is on my end. I need to have someone look at it again. I wish I had fiber service in my area, but I don't. So what are we expecting today? Today, gosh, it's so crunched. The range is so terrible. Today, the expectation, open auction, looking for it to bust out a little bit, 2506, break that double top, and then I'm looking for it to revert back I'm looking for a push to 2504.75, consolidation, push lower into 2502, and then a hold, and then we get the FOMC, and who knows where it's going to head for the FOMC. So FOMC is that line. But overall, I'm looking for the market to push higher, test that 2506, push through to 2507.75 or so, potentially on the upper limit, probably not that much, and then rotate back down and then hold steady in the middle. I'm looking for an evenly balanced profile until the FOMC. That's the primary hypothesis for tomorrow. Okay, so test up early, rotate down, have an impulse down, and then hold steady at the point of control into the FOMC. That's the primary hypothesis. Secondary hypothesis, open auction out of range. That brings us down into the value area, and then we just hold steady in here, not breaking that high until we get to the FOMC, and then we're likely to make a push out of here, more favoring the upside on the FOMC than the downside, simply by looking at the financials. Financials are pricing in favorable move by the Fed during this meeting. So overall, Hypo 2, just keep your hands off. It's a good day to brush up on your homework or whatever. I want to leave you with a quote. I apologize. The image is not so great. It's buffering. Again, I'll have somebody look at it. But I want to leave you with this quote, and it's from Ralph Marston. And to remind you that you should be setting your goals, right? So it says, the quote is, don't lower your expectations to meet performance. Raise your level of performance to meet your expectations. Expect the best of yourself, and then do what is necessary to make it a reality. Again, Ralph Marston. And performance is not how much money you make. In trading, performance is not how much money you make. Performance is how well you do versus your plan. So don't try to measure performance in terms of trading returns, but in terms of what you're doing versus what you said you would do. You know, how solidly are you sticking to your plan? That's what trading performance is about. And I believe if you do that, the money follows. Good luck.